The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And Donald Trump's the winner of the election. You guys are catching us late here. Let's take a look at the dollar. This is what is extremely interesting to me. This is our weekly. This is the 99.09 area. We've hit it, backed off a little bit. We've reached a high this morning of 99.08, That's what it says. I'm getting old. So got to the weekly on for highs, backed off. And, I don't think, Joey and I talked about 99 100 were probably ultimate targets on this. And obviously the volatility that really disturbed me 2 nights ago, is evident in this bar here. But I don't think we're going to stop here. I mean, these treasuries, we alluded to this yesterday. I mean, these things have been just completely artificially suppressed for God knows how long. And we talked about, now it's time to really get on the short gas pedal finally. Somebody else has kind of figured out the highs here. This is the 10-year. And talked yesterday about just selling this thing. Don't look back. Put it in your kids', college fund on the short side, of course. And rates are going to go higher. I mean, the setup, if you really kind of look at the political scene and what's in front of us now, we're talking about more manufacturing. We went through this a little bit yesterday, and all these mechanisms are burying inflation, either in the central bank situations or the currency manipulations, or burying it in like the China goods situation. All those things are probably going to start to come unraveled. And if you are suppressing that inflation somewhere else forever, and then you're talking about bringing jobs back on shore, and naturally prices are going to rise if you're manufacturing goods here, and you're going to have massive volatility in these rates. And if you look at the 10-year, I mean, we're in the hole here. This is the daily. This is the weekly on the 10-year. Here's the 240s. I think there's going to be people exiting this trade continuously, and there's going to be some volatility to it. I mean, the next 3 months, before he actually gets in office, there's going to be people running for the door, and rates are going to rise. And, that's going to be a little disturbing for some facets of the economy, especially possibly the housing market. But there's going to be an extreme volatility in these rates, and there's going to be volatility in the markets. There's going to be a lot of people having to adjust positions. Remember, Steve Banger said it in a very cool way that really kind of hits home. When you have, quarter point on a percentage basis. Let's just they take a look at the VIX lately and talk about percentage moves in the VIX. And they were saying, oh, God, we've had a 40% move in the VIX lately. Well, that's because the VIX is trading 11, and when you get a 4-point move, that's a 40% move in the VIX. So when you're talking about rates on the floor and you get a quarter-point move here, you get a quarter-point move again, you're talking about a really decent percentage change in the rates relative to what they were. And then you've also got, like, as Steve was saying, a lot of these 30 times leverage situations, considering bank deaths and things like that. Those are really, really massive changes that they have to kind of de-lever things based on. And you've got a lot of this action going on, tugging back and forth. So, even though the market's, looking like it's going to bust through the highs here, and naturally this is kind of that inverse relationship, I think the notes have shown that that when the market catches a bid now, they're kind of at best going sideways. And before it was, when the market was going down, the broad stock market was going down, the notes were kind of going down at worst sideways. So I think you've got this reaction going on now. The tale is kind of being told. And again, if you're long treasuries, this may be the turning point for the last, decade or decade and a half that you really got to pay attention to finally. And again, if you've been watching this show, I have been a proponent of being long treasuries. I mean, way before this show started, 2 years ago, a little over 2 years ago with Tom. And we've been talking about, just got to blindly, stupidly buy treasuries up until right now. This is the kind of sea change situation that's going on with these things. And you will not hear me really, except on trading opportunities, talk about, the long-term trend is up and go with the long-term trend and the trend is your friend and all that kind of stuff. Because I think the trend is actually changing. All right. Let's take a look at the den here. And as Larry, that's funny. Larry in the den saying he called the bottom on T-bonds, I guess. Here we go. I'd love for you to call in and let's talk about that, because I know you were in the market back then, and I was actually just starting to get my toe in the water in the market back then, and had no idea that taking money that I'd made out in the tobacco field and putting it at, I thought 15% CDs were just the norm. So that was, God, what a time. Looking at crude, we talked about this one just kind of rattling around 45.52, 44.22. I think this is going to hang around in this range. I know we busted outside of it yesterday, and I think we're, right now, crude is not where you should really be devoting energy to right now. I think we, the decent move has been made. We talked about that from 52 down into 46, taking some weight out, but we are kind of doing this, retrace, close below, retrace back up into that 46.23, reached a high yesterday of around 46. Oil's definitely got a bearish tone to it. I think Larry's on the line with us. Are we honored again, Larry?
No, you're not honored.
How are you?
Anyway, I do remember that bottom in 1981 in bonds, because I was in California at Drexel, and we had the T-bill rate was 13%, and we had tax-free muni bonds, AAA, that were selling for 16%. And that's equivalent to a 32%, payoff tax-free. The trouble is, if you bought those bonds, they were called away in 84, so you only had them for 3 years. But the bottom was in 81. That's when Volcker took over from, or Jimmy Carter had Volcker in there, and he basically said inflation stopped here.
We're hitting break. You want to hang out?
Sure. Yeah.
Okay, great. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. This is a great day. Larry Pesavento's on with us. Larry, you still there?
No, I hung up.
Okay. Hey, if you can, it would be awesome if you could continue, because those were just crazy days back then when you could go in and get a T-bill for 13%. What was the trading environment on the desk back then? Could you explain kind of, maybe the day-to-day, because rates were just flying all over the place. Like, what was it like back then?
Well, back then, the big contractor trade was not the S&P. They didn't even have the S&P until April 1982. Mm-hmm. So the main thing to trade that was really moving were foreign currencies, gold. We didn't have crude oil till 20 years later or more. And the main one was the Treasury bill market. That was the big pit. I mean, there were several thousand people in the pit. And T-bill rates would swing 0.5% to 1% every day sometime, which is equivalent of about 100 S&P points. So it was the big one to trade. Then when Volcker came in and started to smack down, inflation, he basically, put an end to that. And so bonds bottomed, I believe, at 45. They're trading at 159 right now, 156 right now, but they bottomed, I believe, around 45 to 47 in 1981, and then they made a secondary bottom.
That's where you went short, right?
In 1982, when the market bottomed in August of that year, and then they took right up. But the times are no different. I mean, the swings we're having now, are very similar, to what we had then. It's just that the value of the contracts are so much more. You're talking about a contract for bonds used to be 50,000. Now it's 150,000. So that's the main difference. The one thing I would like to caution people about and to keep an eye on, and that is, there's something going on in the Treasury bonds that is very unusual. Well, I've been watching open interest the last few days, and open interest has spiked in this down move. That means there's new sellers coming into the market. One of the things that people in the trade are talking about is the fact that the Chinese are supposed to be dumping Treasury bonds. Now, whether they're doing that for political purposes or not, remains to be seen. But you people have to remember that Chinese are very, very astute and very, very good traders. We've seen it in the soybean market and other markets. Another market that is going absolutely nuts is copper. Copper has moved, 40 cents here in just the past couple of weeks. And now we're, right at a 61% retracement on the weekly chart. But keep that in mind that there could be factors out there that we haven't seen come into the market for a while, i.e. the Chinese.
Well, Larry, that's very interesting information. And on that note about Asia, coming into our conversation, I think we've got Joseph Jong on with us. Joe, are you there?
Hi, John. How you doing?
Hey, we've got you and Larry. This is just unbelievable. How are you
Fantastic.
today?
Good.
John, if I hang up, there'll be one expert on the line.
Well, hey, listen, Larry, I thought it.
Hey, Larry.
Yeah.
Hi, Joey. How are you?
I think it might be interesting, Joey. Could you because it seems like it's always an overreaction over there where you're at. Not that you're causing that overreaction, but I think the Nikkei, kind of started this pressure that night where we went limit down. And, what's kind of been the latest kind of greatest stuff going on over there since the election? Like, what's the temperament of everybody?
Well, the funny thing is Chinese A shares are actually making, 3-month highs or 6-month highs or something. And they never really dipped during the election or anything. So, and it's up again today. So it's I think the local China market has really ignored all that noise, and the economy has been, I think we talked about this quite a bit, John, on the show, that the economy has been really given a boost by all the government initiatives to loosen credit over there. So there's a lot of credit loosening there, and the banks have been giving out free cash basically. So obviously the economy's gotten a lot better, and some of that money has flowed into the stock market because they're starting to tighten up a little bit on the properties now as well. So last week they announced property measures restrictions in Hong Kong. And this week, I don't know. I mean, they've announced sporadically some things in China, but nothing serious yet in China. But in Hong Kong, they did, and the property stocks fell like 8% that day, 8% that day. Yeah. So that was last week, and other than that, I think the economy in China is actually improving now. Whether or not that's stays that way, I don't know, because they've really thrown in a lot of money to help that economy back on its feet. So I don't think they're necessarily going to tighten too much to kind of undo all the things that they've already done, right?
Right. Larry, if you're still with us, if you and Joey could kind of maybe talk about where you guys think rates ultimately are going to be, because it sounds like, to me, there seems like that, with kind of the adjustments that may have to happen now with Trump kind of getting in office here and some of the things Joey just spoke of, it seems like rates are just really going to finally turn north. What do you guys feel about that?
Oh, I don't think there's any question of it. When they hit 177, several months ago, there was, some really big patterns up in that level. And, these markets, it's been 31. We started this bull market in bonds in 81. So you're talking about a 35-year bull market. We haven't seen many of those.
Right.
And they will be able to blame it on Trump, which is they're going to blame him from the crucifixion to the Great Flood. But that's neither here nor there. Whether he'll be a good president or not remains to be seen. He certainly can't do any more damage, is my guess, but we'll have to wait and see. Listen, I would really like to listen to Joey, so I'm going to hang up, and I'd like to hear what he has to say. Thanks a lot, John. Nice seeing you again.
Larry, good having you on. Good talking to you again. Yeah.
Talk to you soon. Yeah, I mean, all things considered, what do you like? Do you feel like they're going to kind of release the valve on the rates over there, and this is going to kind of be just a kind of a spring-loaded thing because they were artificially tamped down, or what are your thoughts on that?
I mean,
or do you feel like they're going lower?
I think rates. I don't think the rates just shoot through the roof. I think it's been a little overreaction here. The economy is not as strong as everybody thinks, and I don't know. I'm a little bit more pessimistic, even though copper has totally just, we kind of call the copper bottom here, but
yeah. Hey, can you hang on? We got to go to break, and then
sure.
Okay, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Joe, are you still there?
Yeah, I'm still here.
Great. Well, listen, we were talking about, you didn't think it was just going to be a dramatic, immediate rise in rates if it was going to happen. If you think about it, nothing's really changed except some policy type angles, I guess, that are probably going to happen soon. With some trade agreement type things probably firstly starting to get renegotiated. What else do you think is? I mean, everybody kind of watches the news, but what else do you think is going to be really big impacting things as far as markets go?
I think what Trump was talking about in terms of in terms of the stimulus package on infrastructure, right? I think that's the main thing and that's why copper went nuts. And if you look at copper, it's actually right up against a very long-term downtrend right now. Although it's, we could pop through that because we've been in this 200 is very, very strong support. It popped out of there very, very quickly.
This thing is on fire. Good gracious.
Yeah. So I don't know. I mean, we're kind of right in that zone right now where we've gotten out of the doldrums and it's been there for a long, long time. This is the first sign of life. I think last time one of the listeners were asking about the Chinese inventories and if that was still a problem. And my guess is that's finally out of the way. They've had a long, long time to unwind a lot of that. I don't think it's completely out of the way, but I don't think it's an immediate problem now. The Chinese economy has been going better. Now, whether or not they have any rate policies to tighten that up a little, I don't know. I think they're gonna leave it alone for a little bit. And if the U.S. If Trump does what he says in terms of some new infrastructure spend, which is badly needed by the U.S. by the way,
God.
so I look at the airports and the roads in China in the middle of the farmlands, and it's better than what you would see in the U.S.
That's what's shocking. I'd like to make a footnote to that because the first time I went there, I was blown away. Like, whenever I ride my bicycle here, I always try to find roads that are kind of, paved kind of nicely because it lessens the bumps and the pain and everything. And they're hard to find these days, around here. But like when I was over there, I was just kind of looking at the roads. I was like, man, these are nice roads. These would be awesome to ride on. And they're all nice. So yeah, I mean, it's amazing what's been done over there. And you talked about shovel ready. I thought that was supposed to happen 8 years ago in here, because I kept hearing the phrase shovel ready, but this time it actually might happen. Is that what you're saying?
Yeah, that's what they say. I don't know.
It was like a giveaway before. It was like, okay, we talked about giving you a shovel, but we're just going to give you the money. Just hang out and watch TV. But I think it actually might happen this time. I kind of agree with you. Okay, well, where's the silvers and golds going to go? Because this thing's just...
I'm completely confused on gold and silver. We're right at an indecision period right now because we have the dollar rallying, and I think we talked about it. It's going to definitely go to about 199.9 or something, or 100, and before we get any pullback. And right now it's at 99.
We reached.
We had a heck of a day yesterday. Luckily, I was kind of on the right side of that, but it was just absolutely stomach churning while it was happening.
I got utterly depressed on the trade I was telling you about, so I'm glad that worked out for you. I went to sleep.
Yeah.
Like a multi-zillionaire in my head, and then, oh God, unbelievable.
Yeah, it was crazy.
Yeah. Well, so if you're confused on gold, I mean, would you suggest, or there's
too many things going on in gold and silver. You have uncertainty, and then you have rates plummeting at the beginning of yesterday, and then going up at the end of yesterday. So I'm completely confused as to where gold should be. Gold is, I think, right where it should be right now. With the dollar continuing higher, I think my guess is that gold should go down because there's a little bit, less uncertainty after the elections. but it doesn't seem like it wants to go down. Like today was supposed to be down.
Right.
I thought it was going to be down today, but it certainly doesn't feel like it wants to go down.
Right.
Yeah.
It's definitely kind of a toss-up right now because I know we were talking about, kind of throwing the wackiness of the election out the window. We were talking about getting down below sub 1250. I still think that's probably the trade ultimately, but it just, like you said, it's kind of giving these signs that, it's supposed to be going down. It's kind of not really going down, and you just maybe have to step away from something when that's happening.
Yeah, I think just step away from it. There's really no winning in that trade right now. Yeah, just step away. There's just too many variables going on, and it's not following any one of them religiously. It's sometimes it follows the interest rate, sometimes it follows uncertainty, and sometimes it follows the dollar, right? Or against the dollar. But at this point, it's doing its own thing totally.
Okay. I'll tell you what, let's move on. We actually have a question in the den. Is China importing much natural gas? Do you know anything about that, or is that something we'd have to research? I don't trade natural gas myself.
No, they're really really looking at alternative energy.
Okay.
And they're really looking at solar, wind. I mean, they've just been huge on all of that. So, yes, they still use a lot of oil, but and still use a lot of coal, which is really bad. But they are, they're really looking at the whole alternative energy thing, and they've invested huge amounts of money in that. I think that's where it really goes.
Okay. Yeah, it seems like natural gas, they're just pulling the plug on that thing these days.
Yeah.
Yeah. Yeah, I mean, it's not, I can't trade it myself. I mean, I commend people who do, but
that's something I don't even touch.
Yeah, I can't get near it. The one time I did trade it, I got just hammered. Never looked at it since, really, in a sense of trading it.
Yeah, exactly.
It's very volatile. Joey, thanks for coming on today, man.
Yeah, thank you. Have a good one, John.
Yeah, I'll talk to you after the show. Okay. Thanks. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Back on the show here, and we're trying to get another cohort of mine on with us today, and just want to get some views from a couple of different angles after we've had the presidency. I mean, man, is it amazing? It's like you're used to going to the TV every day, and now CNN seems like they're starting to pick up the picking back up. But it's they kind of let the air out of the whole thing. It's kind of wild to watch the TV right now. All right, so as we're waiting for Steve to come on with us, Steve Dahl, we're going to kind of pick his brain about a couple of things. He's up in Chicago. We're going to take a look at a couple of stocks here. Some of the ones that we mentioned yesterday that were just flat out, all out assaults on the long side, General Dynamics being one of them. Let's see where we're at here. Yeah, I think pre-market, let's see where we were at. Let's see, 9, 10. Are we printing this morning yet? No. Yeah, some of these defense stocks just had moonshots. Let's look at Northrop Grumman. I don't think this one followed through very well. But I mean, obviously up like crazy. A couple other ones that we were looking at in the healthcare sector. Pfizer. Man, ooh, that is that. Let's see, 1312, 1387. It's almost 33 here on Pfizer. Some of these healthcare stocks, I think, have got some more left in them. We talked about Pfizer ultimately hitting 33.92. I'm sorry, somebody's telling me they're eating crab in Hong Kong right now. There's a really cool place to eat crab and seafood in general on that island. It's right on the water on the west side. Okay, I think we've got Steve Dahl on with us. Steve, are you there?
I'm here, John. How are you, my good friend?
Good. I was just finishing up talking about eating crabs in Hong Kong. How are you?
Well, at 7:45 a.m. in the morning in Chicago, I wouldn't be opposed to it.
Hey, is it getting chilly up there yet?
It is. I just took a short walk with my youngster off to school this morning, and it's getting brisk here in Chicago. Winter will be here before you know it, and the Farmer's Almanac saying a lot of snow coming our way this year.
Oh, really? Cool. All right. Well, listen, man, we've had the election, and Steve's in the loop down in Chicago. We've had the election. What are your thoughts on a couple of things? There's a lot of things I want to ask you. I mean, you were at a broker for almost 15 years, and wanted to ask you about the election. Wanted to ask you about kind of the temperament of what happens in extreme volatility like that we had the other day. What brokerage firms do in general, but let's start with the election. What are your thoughts on some things moving forward? Some things to keep our eyes on.
There was an election recently?
Yeah, there was actually. I think it was Tuesday.
Boy, oh boy. Okay, so now we're all going to have to find some different entertainment for the next year, which I'm sure we will in other dynamics that are unfolding. But yeah, the election's over, folks. It's it's not going to be contested. They're not going to recount ballots and so forth. So whether your candidate is in or out, the reality is I think the market, and we saw this even about 7:30 on election night. I was sitting there watching the calls come in with my laptop, and of course we all watched what emerged, the over 100-point fallout in even the S&P, and all the indices taking a risk-off approach immediately, even before Mr. Trump earned his seat. And the reality is that I think that was a gross overreaction, but it still is very real. It wiped out an insurmountable number of long positions that probably wish they were still having some skin in the game.
Right.
What we've seen now with this market come marching back, in my opinion, from a fundamental standpoint, quite frankly, is maybe an overreaction going back the other way. And
Okay.
as I talk, John, to my deep contacts in the brokerage community and the prop trading world in Chicago and New York and beyond, everyone the rest of the year is probably focused on not doing anything too crazy here the rest of the year. I think this time of the year, November into December, of course, the holidays almost here and so forth. I think you're going to be seeing risk be the number one priority for traders the rest of the way. Not trying to hit that home run trade between now and the first of the year. Really just taking a look at what you have and if you can get burned by being over leveraged this time of the year in an unintended way. So that risk management is the name of the game right here.
Right, I agree with you fully. And at coming up at the end of the year, things get a little thinner, too. And as you might second that note, probably seeing transactional volume kind of dry up. Yeah, and there'll be a lot of people. I agree with you, trying to adjust positions and just trying to prepare for the first of the year, which nobody has a crystal ball and can really. I mean. That's you do this long enough, that it's very difficult to pick which way the market's going in general. You just have to kind of play defense as best you can.
It is, John. It is, John. You talk to plenty of traders just like I do, and I think gone are the days where everyone's saying, "Hey, what's your next big call in the market?" Everyone's talking about, when they're grabbing a beer at their watering hole after work, they're talking about how you keep sane, how you keep afloat and weathering some of the volatility while still being able to pursue some opportunities. But the tone of the discussions are a lot different than they were 10 years ago when you go into some of the trading hangouts. Really, it's a very different lay of the land. It's all about who's surviving and then ultimately going to be there to be in a position when some things start happening.
What with the volatility that happened the other day, what really? I mean, is that one of the more busier time? I mean, like our brokers just having to call clients. I mean, what really goes on? I mean, is it a tenuous time in the like up in Chicago where you're at as being a broker? What's kind of the big? Are people just literally margin calls? Are they raising margin limits? Like what kind of day happens for a broker when something like that unfolds in general?
I'm glad to give some insight. Yeah, 15 years in the brokerage business. I am retired now, just for the record. I'm not a broker, so no calls to open up brokerage accounts with me these days. The reality is that what goes on in a brokerage firm, even in preparation for what's expected to be a volatile time like an election or other big announcements where there's time for the market to know it's coming, sort of thing. They do a variety of things. The prudent brokers, anyway, which I worked for one of the largest independent brokers in Chicago for that length of time, will staff additional personnel. They'll stay through the night. Literally, they'll call in troops to stay through the night and watch customer risk and positions, so that they are available to make that human outbound phone call and say, customer John Doe, are you aware that if this market goes 10 points lower, you're out of money? And give that kind of courtesy and service to customers. That, again, these are the good firms that are out there. A lot of the risk management now is driven by algorithms and automated programs that are assessing things as well. So they got that in the back pocket.
My broker just lets me blow up. They don't even call me. I'm nothing. Hey, thanks for coming on today, Steve. It's great to have you.
Thanks for having me.
Okay. We'll talk to you later. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. What Steve was saying earlier, I don't think Steve's still with us. Nope. Okay. Yeah, what he was saying earlier is they having that broker to just kind of be able to bounce things off of in an objective kind of way. It really has helped me stay out of trouble in the past. And now I was kind of joking at the end that my broker just lets me blow up. They don't call me. But a lot of these fully electronic situations, there's a value to having somebody you can kind of correspond with. You pay up a little bit more for that. And right now rates are so daggone low. I don't think you can go wrong having a firm that it's kind of like your partner in the whole thing. So again, you got a lot of access to information and sometimes great ideas. And, high risk reward scenarios that can be put up by some of these firms. So I don't discount that those are good ideas to kind of look into. Well, I got a question in the den here from Paul. Do we think the S&Ps are going to hit 2184? Yeah, when you have a move like this, I'll tell you this: there's a couple of setups here. If we spin around here, I mean, we can easily come back and retrace down into 2137 before we do that. I mean, I think the good news is right now is the range. The range right now, the big numbers to keep in mind on the S&Ps and the intermediate to long-term numbers. And we're going to give some short-term numbers also. And this is all in the scanner. And by the way, we are kind of making some heavy-duty changes on the scanner right now. We might be down for a day or two, but I think we sent out a message about that. It's got all this information in there. We're trying to do some of these changes to speed some things up, and we're also for a couple of folks that I had talked to about getting a beta of a new version of it. It's an HTML5 version. It's kind of step 1, 2, 3, very indicative on what to do with the newer version that we have, and then the institutional version that you guys have access to now is always going to be there, and it's got a lot more information than the new one, but. The numbers right now, 2147, 2137, and then you've got that 2184 up top. We got close to it this morning. As you can see, we reached a high of 2180.50, backed off. I think there's so many people that just really got caught off guard here. That's what a lot of this is. And you've also got, Republicans in control of the presidency, House, and Senate. And, when you sit back and think about that, some things are going to get done, and it's going to be like a freight train going through the decision-making process, and things are just going to get rubber stamped and move on next. So that type of environment, and especially when you have, economic-minded people controlling these things and making decisions, are we going to hit 2184? I think that's a foregone conclusion to hit that and go higher. But if we pull back, your big numbers again that you can try to pick some battles around are 2147, 2137, and if we spin around and stay above this area for a couple of days, I think we're definitely going to shoot through the highs. Thanks, guys. Thanks for Steve, Joey, of course, Larry Pesavento for coming on today. We'll be back in tomorrow, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.